Earnings season is upon us and the market is in a bull run. Let's talk about what we should expect from the market this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. My name is Chris. I'm part of Riz International, and we are a group of traders who are looking to make our money work for us so that we can achieve financial freedom. And if you are watching us on YouTube, make sure you get down there and you smash that like and subscribe button. Click the little bell icon to get notified every time we upload a new video here on the channel. And let us know what you're watching this week as far as earnings are concerned. And we'll talk about that here in just a minute. But let's take a look at the S&P 500. And, we were on an absolute bull run last week, and we did have a bit of a pullback, and we do seem to be having problems with this 4,600 level. Now, this was a very big support and resistance level before, obviously about a year ago at this point, actually over a year ago. We haven't been this high in a long time, since looks like about April of 2022. So it's been a long time. We've definitely breached our channel here that we had been in for some time. So the market is on a run, guys. That's really all we can say at this point. The Fed raised interest rates on Wednesday up another 25 basis points, just like they said they would, and the market doesn't give two farts. That's really all I can say. I would use other colorful language, but we're not going to do that because of the platform. Obviously, we had quite the bit of a selling day here on Thursday. We gapped up really high in the morning, right up to that 4,600 level, and absolutely sold off. Everybody was dumping off their securities, but then on Friday we came right back. So a little bit of an aberration here, not completely unsurprising, but it really gives you an idea of what is going on in this market, and that is that it is freaking wild. That's really the only way I can describe it at this point, because it is so up and down and up and down. And sure, you may look at this trend and say, oh, well, it's just going up. Yeah, but if you bought in here at 4,600, you're hurting right now. So timing really is everything in this market. And if you're part of our elite membership, obviously, we're giving you the most up-to-date information that we can as far as what positions we're in, where we're getting out. But, if you are somebody new trading this market, it is going to be really easy to get shaken out, which is why we're being so very careful with our trades at this point. I know that probably a lot of people in Elite are wondering, and, maybe you on YouTube as well are wondering, well, when are we getting in? When's it time to go risk off? And I'll tell you, when we are this extended from the moving average, when we are approaching overbought on the S&P 500, it is not necessarily the best time to really be just going risk off and going hog wild with your positions, because we're kind of overdue for a pullback. Now, I know what you're probably saying. Well, Chris, you've been saying that for months, and you wouldn't be wrong saying that, but that doesn't mean that we're not right. Just right now, obviously, the market is on a tear, and if you got in, good for you. I hope that it works out for you. We're being a little more reserved with our positions at this point, and that's because we feel like this is kind of overdone, and we really haven't priced in the fact that there will be more rate hikes this year. The Fed has alluded to that, and it's something that we're preparing for, and you should probably be preparing for it too. And if you're part of Elite, we're definitely helping you with that. Let's take a look here at the breakdown for the S&P 500 and what really made gains this week on as far as earnings are concerned, and that would be communications going absolutely hog wild. Here on Monday, looks like we were sitting right around 35%, and we jumped up over 6% just in 1 week off of these earnings. A little bit of a, kind of a curl back up here on tech, kind of taking in some of those communications earnings, but still consumer discretionary sitting there right in the third spot, and the S&P 500 still up almost 19% on the year. So a very, positive time on the for the S&P 500 so far, but we still have a lot of sectors rather that are underperforming. We've got financials, consumer staples, real estate, energy, healthcare, utilities, all underperforming the S&P 500 right now, and it shows you how propped up this tech and communications and consumer discretionary sectors really are holding up the market at this point. If we see a breakdown in that, then obviously we will see the market in kind of dip down with it, but we are really being pushed up by these communications earnings that have been rather good, honestly. Earnings so far have been very positive. If you look at those that reported this week, a lot of them beat expectations as far as earnings per share, EPS, and revenue was above. So, things are looking up. all things considered. But still, we kind of feel that with the economy the way it is, and with things going on in the world, let's just put it that way, that maybe going, balls to the wall and kissing, risk tolerance to the wind, maybe not the best plan right now. So that's why, again, we're staying kind of conservative with our trading. One thing that is not staying conservative, and I've been calling for this for a while, is this nice big run up here in oil. So we have kind of broken through this 76 area that had been holding as, some resistance for us, and a very bullish move on oil here. Looks like we closed on Friday at $80.58 per barrel for light crude. And I can tell you that I am feeling that in the pump here in Indiana. Definitely prices are up on gas, and we are seeing that being reflected here in the price of oil. Now, of course, we do know about the OPEC plus production cuts, so that this may be, a bit of that taking action, them cutting back on the supply while the demand stays the same, means the price has to go up to meet that, supply and demand curve. So we are seeing that price of oil increase. So very nice run up here. We'll have to see if 85 holds here. This 85.40 has been a pretty important area in the past. We've definitely had some bouncing off of there. You can see here a very nice pivot point here before. So we're going to keep an eye on that. No position in oil just yet, just like gold. Now, the next slide where we talk about the the U.S. dollar and the bond yield is going to tell the tale. But everybody who's saying that the dollar is dying and the gold is where it's at, well, we'll see about that. I'll just put it that way. Gold really just kind of bouncing here off of this 1967 area, really holding this line very tightly. We did come really close to the all-time high here back in May, rejected that, kind of came back down here to around 1900 and bounced up off of there. So really just a bit of consolidation in gold so far, nothing too exciting to talk about. But what we will discuss here is the nice little rebound in the dollar. Everybody's talking about, de-dollarization and BRICS and all this other stuff, but yet the dollar is still here. The dollar is still strong and pushing back up over the 100 level, really bounced off of this, starting on Monday and showing a lot of strength in the dollar at this point. We're still seeing the inversion here of the yield curves, with the 2-year bond yields being, running the show at this point, right at 4.881% for a 2-year bond. So very nice yield on that, while the 30 and the 10-year bonds are holding right around 4%. So, we're still seeing that big discrepancy that we've talked about the last couple weeks, between these bond yield curves. And that's something that we're keeping an eye on as we continue moving forward. Now, but before we get to the important dates in the market this week, let's talk about earnings, because there are some big companies that are going to be reporting this week. So we've got really nothing too exciting, in my opinion, on Monday. These are not really stocks that I ever trade, but Tuesday is when the exciting stuff happens. We've got Pfizer before the opening, Merck, another one, a big air carrier, JetBlue in there, Altria, if you're into that sort of thing, also reporting before the open. And then everybody's favorite chip manufacturer, it's AMD after the close on Tuesday. That one is one we will be watching, I can promise you. Starbucks, another one that's interesting to keep an eye on. We got CVS on Wednesday. Kraft Heinz, another big name, reporting. Let's see, PayPal. I know we all love PayPal here. One of the two. Shopify, another big name on Wednesday that's going to be reporting. Let's see, Thursday. Wayfair, if you're into cheap furniture, could be interesting to keep an eye on. Hasbro, I play Magic the Gathering, so obviously I'll be watching that one. But then the big one after the close, we've got Amazon and Apple, the two A's, going to be reporting on Thursday after the close. That is going to be a very important earnings release, so definitely make sure you're keeping an eye on that one. And then Friday, maybe Enbridge if that's something that you're into, but pretty much Thursday after the close is when we're going to be seeing that. So really big names this week on earnings. And let's take a look at the economic dates. And of course, if you're here on our live webinar and you have a question, now is the time to start typing it into the chat. But let's see here. Really, ISM manufacturing, PMI, don't really care. Job openings, that could be interesting, but not too much. Services PMI, nope. Here we go. Here's the big one right here. Unemployment rate. This is one that always seems to move the market, and this will be coming in on the heels of Apple's and Amazon earnings on Thursday evening after the close. So this could be a potentially big catalyst if, let's say, for example, that unemployment starts going up, that Apple and Amazon earnings aren't so hot. We could see a rollover at that point. Now, the opposite is also true. If we see good earnings from Apple and Amazon and unemployment rate is, decreasing, or, people view it as a good number that they report, that could push the market up. So there are definitely two different ways that this could affect the market this week. But I think this Friday catalyst is going to be the most interesting, especially with Apple and Amazon reporting on Thursday evening. So definitely something to keep an eye on there. These other ones are pretty much nothing too interesting if you ask me. But yeah, unemployment rate is something that always seems to move the market in some way or another. So you can expect some moves on Friday before we go into the weekend. But yeah, that is our recap webinar. I'm going to wait here for all of our people on our live webinar to go ahead and, post their questions for me. If you want me to take a look at something, I'll be more than happy to do that. So I would just say, obviously, Riz isn't here tonight. He has another engagement he had to be in. If you are in Elite, you know what I'm talking about. Let's see. Jeff has a question. And he says, I'm long DKNG and RDFN going into earnings. Both are near just below break even. I'm considering selling covered calls against them. I'd love some thoughts going into next week. Okay, absolutely. This is a wonderful question. DKNG, otherwise known as DraftKings. Let's do some gambling, shall we? So DraftKings obviously got a bit of a boost during that terrible time that we don't remember and we don't mention on this platform, because to do so will get yourself suppressed. So obviously during that whole 2020 fiasco, DraftKings saw a lot of movement because, well, people were at home and they didn't have anything freaking better to do. Let's just call a spade a freaking shovel when we have it, right? But then after that, DraftKings has been getting rather hammered. But that being said, here at the start of the year, we are starting to see it start to crawl back up. So, let's see, all-time high is right about here at 74. We came all the way down to like 10 almost. Yeah, just about 10. And since the beginning of the year, we have basically tripled our stock price. So obviously earnings is coming up. Let me get this. There we go. Beautiful. Earnings coming up, looking like they're expecting a miss, which isn't too surprising, or I shouldn't say a miss, a negative earnings per share. That is different. That's not a miss, my mistake. So, if you're looking to sell covered calls on this and you're close to break even and you're selling your covered calls at a point where you would make profit, my opinion is if you feel comfortable letting it go at that strike price, and it would either, it would hopefully make you money if you sell at that strike price, then I would say I wouldn't worry about it too much. Obviously, going into earnings, I suspect that there will be some volatility involved in that. So definitely a great time to potentially make some premium on your covered calls. And, again, depending on where you got in, of course, you said you're about break even. So I'm guessing you got in somewhere in this area, if I had to guess, or you've been holding for a while from back here. Doesn't matter. But if you're just kind of close to break even and you're going to sell some covered calls, and those calls would, again, you'd sell them at a profit, basically if your shares get called away, I wouldn't feel too bad about it. And this is the tricky thing with trading, right? It's always the hindsight aspect of it, right? We're looking at a trade and you're like, oh, well, I could have made so much more money if I'd have held, or, oh, I could have done so much better if I would have averaged in here, or something like that. And it's one of those things where if you extract money from the market, I basically go right past the stock market on Wall Street, waving that money and watching them cry as I put it in the bank. Anytime you make money on a trade or something along those lines, I always count that as a win. Sure, if you knew the future and you knew that DraftKings was going to gap up to 48 or something crazy like that, then selling covered calls maybe not the best idea. But if those get called away and you make a profit off of your initial position, I would be happy with it. So as far as how this is going to behave, let's kind of take a look at previous earnings on this. So this one they beat EPS. This one they beat as well. This was a slight miss. So let's see here, like negative 5.3, let's say, negative 8.7, negative 2.5. So they're expecting a fairly large increase in EPS based off of this rise in the stock price, if I had to guess. So I kind of feel like they're setting them up for a miss. That's a big jump from last earnings being, negative 8.7 and now expecting negative, 0.25, so negative a quarter. That's a pretty big jump, unless people have really been jumping in on DraftKings. And again, I don't know. That's not my bag, as they say. That is quite a jump. So I almost feel like it's a bit of a setup. Who knows? As far as that's concerned, obviously, I don't have any insight on DraftKings, insider information, I should say. But yeah, I don't know. I'm not sure if we can continue this. This is obviously kind of rolling up with the market at this point. Yeah, I'm not super sold that they're going to gap up really big. I mean, even here, yeah, so it's about a 0.007 beat, and it was a bit of a gap up. Let's see here. So we're about 21 to 24, so about 3 points thereabouts. Seems about right. Here we gapped up from about 29 to 31, so about another 3 points. So, or 2 points because math is hard on stream. But yeah, I mean, I wouldn't feel too bad about this one. Let's take a look at Redfin, RDFN, if I'm not mistaken. Yep, I was right. Redfin, nailed it. Okay, so obviously, if I'm not mistaken, Redfin is real estate. If I recall, I could be wrong on that. If I am wrong, in the chat, hi Athena, feel free to correct me on it. But I believe Redfin is an online real estate broker. So yeah, real estate financial services. Thank you, Jeff. So I was pretty close. Again, somewhat similar to DraftKings here. It looks like we bottomed out right at the end of last year, here right around $3.50, and we've been kind of grinding back up to $14. So, a very nice rise, especially if you bottom tick this thing here at the end of last year. Congrats to you. But I know you said that you're holding basically probably right around break even. This one I would feel a lot more confident doing the covered calls on. Negative 0.33. Let's see, negative 5.5, negative 5.7, negative 8. Again, these earnings expectations or estimates are rather high. If you ask me, it's really expecting quite an increase from where they were before. So this one I feel more confident on selling covered calls with, not getting called away. DraftKings feels a little bit more risky to me, but Redfin, these online real estate brokers really have not been doing so hot as of late, in my opinion. It's one of those things where there's quite a lot of real estate on the market at this point, and people just aren't selling. Excuse me. So there's not as much. I misspoke there. My mistake. Because everybody locked in those interest rates back in, the 0% prime interest rate days, and they got in their fixed rate mortgages in at like 3% or something like that, or less if you're lucky, and they're just not selling. And even though housing prices continue to go up, there's just not enough, especially I know in my area of like single family homes. That's a really difficult thing to find at a reasonable price point at this point. So I think a lot of these online sellers are really kind of hurting as far as that's concerned. So with Redfin, I would definitely feel more confident doing covered calls on this one, even though they did beat EPS the last 2 times. They didn't even come close to what their estimate is this time. So that, to me, there's a bit of a discrepancy there. I'll be interested to see these when they, when they come in. So thank you for bringing that up, Jeff. Again, I would feel more comfortable doing Redfin covered calls than DraftKings. I feel like DraftKings is a little more volatile than Redfin. Redfin doesn't seem to move as much, and yes, it does have big days, but it also has a lot of like little rinky-dink days where it doesn't do anything, where it doesn't have a whole lot of movement. So yeah, I would definitely feel more confident doing Redfin than DraftKings. But I mean, if you sell your DraftKings covered calls at a strike where you're making money, then you should be in good shape. All right, Dylan's iPad. Can we take a look at J&J and KO next? Absolutely. Johnson & Johnson. Johnson & Johnson on a frickin' tear. Absolutely, Jeff. You're welcome. Johnson & Johnson going absolutely nut here. Massive beat by about 7%. Nice 3% on revenue. And yeah, Johnson & Johnson going crazy here. Way overbought at this point. Where are we at here on the RSI? Right around 77.5. So this is looking way overbought at this point. More so than it has been in a long time. This is looking like it's due for a bit of a retraction or a retracement rather. But that being said, I'm not one to step in front of a freight train and short that thing. Okay, so Dylan says he bought a large position at 158 and sold at 169. Hell yeah, that's what I'm talking about right there, Dylan. Well done. Well done. I would be happy with that one. And honestly, with this run up on earnings, you made probably the right call on that sell, if you ask me, because when you get that big of a move that fast, you typically don't expect it to be going like this. But let me zoom in on this just a little bit here. We're seeing some pretty big tails and some wicks and tails on these things. I'm definitely seeing a lot of indecision as far as, buyers and sellers on this one. Obviously, we ran up pretty high here on the Monday, the 24th, after earnings a couple days, and it sold off, and then we just kind of bounced back up after that. So I would be careful getting back in on this one, and I don't think I would short it either, just because I feel like it's really just a 50-50 lottery ticket at this point, because things like this can be really tricky. But if you made that nice of a profit, I mean, that's $11 per share right there. Hell yeah, bro. Well done. That is an absolutely bonkers trade. If you're looking to re-enter this, I would wait. That's my recommendation. I would not short it, but I also wouldn't long it either. I would look at this more as a potential long position, but I want to pull back first. We're way extended past the 200 at this point. We have the 50 and the 100 are starting to curl back up. We could see kind of a bit of a retracement here. At least this is kind of how I feel like it may go. Kind of like may come back down this direction. By that time, the 200 is probably going to be doing something like this. We may come back down here once we kind of hit that. And if it does bounce off of that, I would consider myself personally, if I were taking the trade, re-entering at that point. I'm not trying to tell you what to do, but if I were doing it, that is something I might consider, but I would not buy it here. And I wouldn't short it either, because it seems way too risky. It's literally akin to playing chicken with a freight train. And that can really get you pretty bad. Just ask Riz. He'll tell you about it. All right, let's talk about KO. Who wants some Coke? I'm thirsty. Let's see here. What's Coke been doing? Coke has been trading sideways. That's what Coke's been doing. So Coke, let's see. Let's get some support and resistance here. About there. And right about there. About perfect. So we are in this nice little Coke channel. It looks like a can, and it kind of has their little swooshy pattern on there too. So obviously they're just trying to mimic their own marketing. So what I'm seeing here with Coke, we had this nice bounce off of about 59, and we are pushing up. Looks like earnings were positive. Yes, we had a nice little beat, and the day of, we had a nice big buying candle, and then some retracement here. I would say if you're looking to potentially get into Coke, if I were going to do it, and I'm not trying to give you financial advice, but if I were going to do it, I would wait and see if Coke just kind of holds these levels here around this 63, 62 area. If it can kind of consolidate in this area, we may see a move back up. So what you can see when earnings are kind of like this, you have this big buying candle, and then we have a bit of a sell-off. There are a couple things that can happen. It can kind of trade sideways like this before it gets some steam and starts going again. That's my guess as far as what's going to happen. But the other option is it does like one of these, and then it does this. Now, of course, market conditions, taking that into account, it could also just do this. So there's obviously lots of different ways to play this, but with earnings being so good, and revenue being up almost 2%, the future looks bright for Coke. I think people still like their carbonated beverages. Goes good with other things too. And so, I think Coke is looking okay. After this big buying candle, I think we're just going to cool off a little bit before we start another move. So that would be my recommendation on Coke. How many times Will AMD mention AI? That's a good question, Oz. Let's take a look here. The question is, how many times will they do it during the earnings call? Perhaps what we should start doing with things like this is we need to start doing bingo cards and, have different squares being different things that they could say on earnings calls. Be like, AI is the future. If you had that on your bingo card, congratulations, take a shot. Something along those lines. But if I had to guess, they will probably mention AI no less than 10 times. That is what I am going to say as far as AMD is concerned. Now, of course, AMD, as we're joking here, has really benefited from the all of the AI hype. However, we do seem to be cooling off a bit. Obviously, there are other things to talk about now, with Congress talking about UFOs and things like that. We're talking less about AI now, and we're talking more about aliens. So AMD does not have any alien defense technology, which is why it's obviously suffering. If you have not caught my sarcasm yet, please understand that I am joking about that. I know that some people on the internet cannot take a joke. So I know everybody here in Elite does, and you all understand my humor. But, AMD, of course, one of the premier chip manufacturers, in my opinion. I've said this before. I'll say it again. I have an AMD CPU in this computer that I'm running this webinar on, and I absolutely love it. They definitely have got me, and I will definitely be buying from them again if I need to get another CPU. But yeah, Abhishek says the same thing. Abby and I are on the same page. So we are there together, brother. That being said, going into earnings here, we definitely are, in a little bit of a downtrend on AMD. And I think that is some cooling off of all of the AI hype. We were all talking about it all the time before when it was on the hill, and everybody was like, Chat GPT and, AI is going to take over the world. And well, Judgment Day hasn't happened yet, and I'm not running away from T100s or T1000s, excuse me. So that's good, at least. From a technical standpoint, AMD kind of blasting through the 50 moving average here and just kind of rebounding and holding below the 50 right now. But you know what doesn't care about technical analysis? That would be earnings, because earnings doesn't give two farts about any technical analysis or support and resistance levels at that point. So if earnings are positive for AMD, I suspect we will see a bit of a run up. And if you are expecting earnings to be good for AMD, it could be an interesting play to get in now. I personally wouldn't. I have been burned so hard by AMD earnings in the past that I will just not touch this thing before an earnings call. Way too volatile at times. And I don't care how many times they mention AI in the conference call. I don't know if it will be enough if earnings and revenue are not in line. So I like AMD in general. I am not forever long AMD, but I definitely like their products. I think they offer a valuable service, and I think that the demand for that service is only going to be greater and greater as we move along. But, if we kind of look here, obviously we are a good ways away from the all-time high here, right around 164. So, or at least the 52-week high. And then we got a couple more from Dylan coming in. But yeah. I would say AMD in general, I like the stock 100%. I think the company is great. They make a great product. And I think that if we see more decoupling from Taiwan or things like that, or if anything continues to happen in the South China Sea, the chip manufacturers here stateside are going to see a boost in business. So that's something to consider as well, because there are other things that are affecting that. Okay, Dylan wants to take us a look at Microsoft and Netflix, and then I think we'll probably call it a night. Microsoft. All right, looks like earnings were good. So what do? We sell. That's what we do. So we had a little bit of a buying candle here on earnings day last week, and then we had a nice big sell-off here because obviously way overvalued. These earnings don't represent this stock price, this valuation, so let's sell it off. That being said, we did have a fairly nice bounce here on the 50 on Friday and a nice big push up over that. Obviously, these moving averages are very extended here. I mean, you can kind of see, how far apart these things are with my beautiful 3 drawing there. But that's mostly because we've been on this huge bull run since about March. Honestly, we came down here and we've just pushed up ever since. So that's why we're seeing such a big variance between those 3 moving averages. It feels a little overbought to me. I know the RSI doesn't suggest that it's overbought, but it feels like it's a little inflated right now. So I'm not overly surprised that we're seeing this selling here. Let's look back. Oh, did we hit an all-time high? Yeah, we hit an all-time high at Microsoft here. Looks like right before earnings, and it has rejected off of that pretty hard. So I would say if we continue to see this curl upwards, we may take another run at the all-time high. So you could potentially see, about a 20 or 30 point spread, depending on when you get in. As far as your potential upside for the trade, downside of the trade is considerably larger. So I would be very, very careful. I would use these moving averages as potential places as stop losses personally. I know Riz doesn't use hard stops, but that doesn't mean that you shouldn't. There is something to be said for letting a trade run and let it work, but there's also something to be said for just getting the F out if you're getting slaughtered and deploying that capital elsewhere. It looks like we got a dividend coming up on the 16th of August. Another thing to consider if you do go long on this, which is always a nice thing, free money is good, so I've heard. So that's something to consider as well with Microsoft. But yeah, we're just seeing a pullback here from the all-time high breach, and we blasted through it. I mean, let's see. Yeah, so this is actually a very good demonstration of support and resistance right here. So you can kind of see here this 350 area. I know 349.87. Let's call it 350, shall we? Really hard rejection off that area here, which was pretty much the all-time high before. We see this a lot. Typically, the all-time high is often a point of support and resistance. So, and more so resistance when you get up there, especially a second time. So we saw that huge rejection here back in June, and then it just kind of, consolidated. It made the next move up and then sold off. We may see this pattern again where it consolidates and it makes another move. That's one potential. It could also just sell off. So I would just be careful with this one because we've been on such a big run here. I feel like there is a little bit of downside. So just be careful if you're going to jump in this early. Maybe go with a smaller position size. That might be a good way to do it. And then let's take a look at Netflix, the company that killed The Witcher. All right, let's see. Netflix, they have been having, from what I understand, some decent subscriber numbers. If I'm wrong about that, you can feel free to correct me in the chat. But it looks like revenue was a bit of a miss here. So, we had a very indecisive candle here on earnings day and then a big sell-off. So I think that, all jokes about The Witcher aside, which is one of the few reasons why I still have Netflix at this moment. From a technical standpoint, not overly surprising. A bit of a mixed result here on earnings, a huge EPS beat, but a fairly, they lost almost 100 million or missed revenue by 100 million. Not insignificant, not something that I often find in my couch cushions. So, a bit of indecision here, and then we got the big sell-off. So, the Bears won on this one. I would say don't fight it, but that being said, we have a very nice technical bounce off the 50 here. So, we sold down right below it on Thursday and then bought right back up on Friday. Don't forget we had that big red day in the market on Thursday as well. So a lot of these things you'll see had a very, a fairly large red candle on Thursday, and then it was bought right back up on Friday. So it looks like pretty good bounce opportunity here. Again, I would be using the 50 as my personal guide if I were taking this trade, or probably right around here, 411, 412. That's going to be a pretty active area, it looks like. Definitely a lot of buying and selling going on in that zone. Yeah, right around there. That's 413. But yeah, definitely using one of those as a potential guidepost for your trade. If we have a close below that, could be a good point just to say F it and let it go. Just like a lot of people are ditching Netflix. But, joking aside, from a technical standpoint, it looks pretty decent. If it holds here and the market continues to run on Monday, then you could see a decent amount of potential upside for Netflix. So something I would consider. Again, I'm going to want to see what it does on Monday before I jump in, but definitely one to keep on watch. And of course, I want to thank everybody for coming out. If you made it this far, leave me a comment down below in the video. What tickers are you watching this week? What are you excited about as far as earnings? And do you think that the market is going to continue to run or not? Let me know down in the comments. Thank you for all of our elite members here who joined us on the live webinar. You guys are awesome. And we will see you in the market on Monday.
Bye.